Robschild. No investment advice. Welcome to the show where we view financial markets using Ben Graham's investment philosophy, macro, technicals, and of course, crystal ball gazing in that order. Today is Monday, January 6th, 2025. Today's episode, I exited my Bitcoin short today. With professional money coming into the market on Monday combined with it continuing higher, and I do expect the market to roll over here. I have a much larger short position still sitting on semiconductors. But this is one of those situations where I'm wondering if Bitcoin can become uncorrelated to other assets, in a situation where stocks suddenly crash and maybe people start rushing to Bitcoin and Bitcoin soars higher. I don't know, but I got it out of my Bitcoin short. I still sort of like the risk reward here, and I still see it looking like a head and shoulders top. And we said, for it to get bullish, we need to break above this line. But again, for me, it's about the added volume today, and the next candle, tomorrow's candle, starting already because it's UTC time. Forming yet another bull flag. It's like, ideally, where you want to short is when it's closing and confirmed below the 92,000 level. That's when it's more, that's when we can have more confidence it'll drop down to the 75,000 area. I thought for sure on last Monday that it was doing that, but apparently not. Next, I wanted to just do a quick announcement. I'm going to be going over the chapters of Common Stocks and Uncommon Profits by Philip Fisher. This is another, standard book to be very familiar with and goes along well with Benjamin Graham's work. So look out for my series on that. Tuesday, tomorrow morning, we have job openings coming out on the Fred website. Job openings, total non-farm payrolls. As you can see from March 2022, we have just been collapsing down and down and down and down. And, it's like, where is it going to stop? Is it going to stop here? Are we going to pause and then go back up and have more and more job openings? I mean, it's actually sort of a possibility when you consider the implications of what's going on in the government with closing borders. I mean, maybe there will be more job openings. I don't know. But as it stands, they've been going straight down for a long time. And me and my crystal ball see this continuing to drop, perhaps at some point in the near future, dropping at a faster pace. Tomorrow could be the start of that, or it could be nothing at all. We'll see. We'll take the data as it comes. Another clue as to what's going on with jobs is Wednesday, we have the ADP employment coming out. And then Thursday, markets are closed in respect of Jimmy Carter's death. And then Friday, we have the big unemployment report. This is the most important one. It tells us the percentage of people that want to have a job that do not have a job in the United States of America. This triggered the Psalm rule back in July. And, where are we headed from here? Is the unemployment rate staying steady, going down, or are we going to kick it up to higher levels and give more confidence to the bear case of the economy and stocks and, risk assets, all of it? Yes, it's Monday, and I said I do macro Mondays. Nothing's changed. I'm not doing another one until we have significant changes. So if you want to hear me read through the extremely important daily reminders, watch the episode that is titled Friday the 13th with a tornado in the ball, because essentially nothing's really changed since then. Also, in that video, I explain my crystal ball ratings and my portfolio, and nothing's really changed very significantly in that. Although tonight it looks like there's some news about Tencent, which affects KWeb. Obviously, we could have potential short-term bearishness in China. I don't know what's going to come out of it. Moving on to the charts, the S&P 500 popping to the upside. I've been saying, what's going to happen Monday? What's going to happen Monday? Because clearly we're out of the Santa Claus rally time period, and I was thinking I did not expect us to pop to the upside, I gotta say. But will add to that that the high of the day, which was early in the day, met this previous trend line and got pretty strongly rejected off of it. And yeah, I don't know where Mr. Market's going to go from here. Overall, this index is clearly overvalued to me, and so it would make sense for it to go down in price, but I don't know. I don't know what people will do. Always remember the stock market is a voting machine and not a weighing machine. Not at least not in the short term. I've been seeing many people talk about a huge drop in the dollar today, and yeah, if I guess you could say that from if 107.76 is low. I mean, this scrolling out, this doesn't look to me like we're necessarily headed down in the dollar, and I wouldn't expect the dollar to roll over to the downside from here. So my guess is we're actually still bullish in the dollar, but we'll see. Got to keep an eye on it. TLT, my favorite place to be, finding new lows that we haven't seen since, what is this, like May of 2024 now? So about a 6-month low or 7-month. I wanted to bring up TYX. This is the 30-year Treasury bond yield. It obviously correlates a lot more to TLT than TNX, which is the 10-year Treasury yield, but that's the one people usually use to track longer rates, because trying to predict rates, past that is kind of pointless. But I'm finding some interesting, crystal ball readings in the charts in this TYX, the 30-year Treasury bond. If we move out to a monthly view, I had previously written a line that we hit our heads on, like literally today. And that comes from, believe it or not, I had this in the right spot earlier. The top of 1984, May of 1984. Wow, that's a very interesting date for Robschild in particular. If we drag this line down, you can see we have parallels from the top of 87 to the top of 2019. You drag it down further, and you can see it correlates well with a bunch of bottoms. 1, 2, 3. It's like this is a interesting long-term psychological level in yields that I'm seeing here. Not only that, we should go back to the daily view of this. The yellow line is it's a horizontal line, and we are at a double top from April of 2024. So there's resistance here. Is this the top of yields for a while in the 30-year Treasury bond? I don't know, but it does look like we're getting into an interesting point, some interesting points of resistance here. I mean, I can't ignore the fact that I benefit hugely if yields go to the downside, and I do suffer it going higher, although it does give me more opportunity to continue putting more of my income into TMF. Because, at the end of the day, bonds are yielding a lot compared to what stocks are basically potentially returning here. When you look at the whole picture, I mean, I'm happy to be in Treasury bonds still. I have no fear of this, but I'm curious, just very curious. Speaking of things that aren't going my way today, with my 5% of my portfolio still sitting in semiconductor short. By the way, when it had already gone down, I had already shaved off a ton of profits. So I'm at a slight loss at the position that I had trimmed it down to now. But, my rule was, as I had said before, I want to see a close above the big red engulfing candle of October. Did we get that? So the closing price today was 260.23, and you'd have to compare that to the open of this candle, which would be the top of the red candle, which is to 259.85. Or no. No, I would want to use the high, the wick. Here on Robschild, we're not the biggest experts of these candles, but let me just let me have a second here. So we did close below the wick of that candle. So the high of the day being, that was the one I was going to bring up, 260.95, whereas today's close was 260.23. Not only that, we have what's called a topping tail. This very large tail says that, there were plenty of sellers up there to drive the price back down. Yeah, if we close on a daily basis, very clearly, I'll say above today's wick. If we close above like 263, I'll probably exit the rest of my semiconductor short at a loss at that point if that occurs. As much as I think that this industry is overvalued, I can't control what Mr. Market will do and how long he'll do it for. And that's why, you got to be tactical with any kind of short, and you have to be willing to admit defeat every once in a while with shorts. With longs, you can hold much longer and be fine. I mean, another way to do it is like long dated puts, like I still have on HYG. Maybe I'll look into that if I get out of this current short position. Anyway, moving on to HYG. Speaking of other shorts that aren't currently going my way, it's just kind of funny that we've just been going up and up and up here. And then Dr. Copper, I've been bringing up on shows as having, hit this trend line of the Head and Shoulders gigantic top. And Dr. Copper can't break through this line. This is holding steady. It's one sign to me that, maybe the fundamentals aren't there, as far as market technicals go, maybe. Overall, when I look into my crystal ball, I see markets just getting, I would describe it as reckless more than anything. Just looking across what markets are doing, where money is going, and it's just everything's looking really reckless to me. And so I suspect the bear market will become very obvious very soon. But that's just me, and that's all from me and my crystal ball. I hope you enjoyed, and see you next time. Rob's Child.